of our Enterprise on Ethereum live session with the eea. And today we welcome Merlin, co-founder of Morpho, and Charles from S&P Global. That's going to be still a streaming and a podcast, I would say, in English, even though you will be able to have some French in here, because I think we have three French around the table. We're going to be part next week of a Vault Summit that's going to take place at NIC with Morpho and SP being one of the two main co-hosts. But maybe first, I'll leave you like the classic, if you want to give a quick introduction. What for those that don't know what is Morpho or S&P, who knows, they might be, and what excites you about that event next week. Merlin, you want to start?
Great. So I'm Merlin, co-founder of Morpho, leading the integration there. So Morpho is a credit layer. It's a credit network where anyone can connect to that network, earn yield by lending crypto assets and or borrow crypto assets, mostly stablecoins, against any type of collateral. So it could be crypto native assets like BTC, ETH, or it could be reward asset, receivable, blah blah blah. So that's basically what we've been building for the past 5 years, and we're extending that network. We're going to release very very soon the fixed rate protocol that we call Midnight. We announced today we showed the white paper and the code. And as of now, I think there's maybe around 13 billions of total deposits. This is growing, and more fintechs and institutions are connecting to that network. And I guess we're going to discuss about that today and during Vault Summit. And second question was around Vault Summit. So super excited to partner with S&P, and so it would be mostly around Vault risk management, on-chain product towards institution adoption. And I think it would be in a very, very nice place. And I've never went there, but it's a New York stock exchange. So thanks S&P for that.
Happy to do it. Quick intro on what is S&P. I learned that it's often useful. So S&P Global is a company that is, we have several divisions. We have S&P Global Ratings, which is a leading credit rating agency. When you hear about AAA, BB, etc., that's what the ratings are. Then red one, okay, you're back. Then we have S&P Dow Jones Indices. So we are the leading index provider. A few other divisions like market intelligence for data and software. There is energy, where we have a product like Platts for that are used in future, etc. So it's a pretty broad company. I sit in the strategy level in the corporate org right now. I started the team with my co-founder internally in 2022 in the rating division. Then we recently moved to help lead the effort across every division. So S&P has been building several products in the field already. We did the stablecoin stability assessment, which is a probability of depeg of stablecoin. We created that after what happened with SVB and the depeg of USDC, and there was a big demand on what is the risk of depeg of stablecoin. We're also rating a lot of different things. Most of the rating we have are not public, so you cannot share them, but there are a few that are public related to tokenized money market fund. And we had the Sky rating recently. We had Leden with Bitcoin back loan recently, also with strategy with the Bitcoin they have, etc. So we're really the leader for everything related to digital asset ratings in the field. On the I'll say DGI for Dow Jones Indices side, we are we created different indices, for instance with Dinari, mixing equities with token. We tokenize the S&P 500 with Centrifuge. It's now available on Morpho. We announced that we would have iBox on Canton. So there's a lot of different initiative all across the field. I'll stop there, but there's big company with a lot of different use cases.
And
On the Vault Summit, sorry, I forgot also the second question. Vault Summit, so we have been following the Stable Summit for several years. When the same organizer announced that they would be doing something on vaults, we immediately were extremely interested. We went to the Buenos Aires and the French version that happened. We were really interested to see that there was the most successful event of those side event at big shows. You could really see the trend there, and our client have been asking us about Vault for the last 18 months. So we thought we really want to show our interest in the field, and we had the opportunity to host the conference at the New York Stock Exchange, and that's how we got there.
Yeah, thank you for kudos to actually like the Party Action people. They also we've been a competent partner for them at the EA, and I've been to a few of their events, and they combine like the right size of like not too big, not too small, but a great diversity of people. You know, like there is not just pure Web3 that talk between each other. It's also like there is a good addition of traditional finance, and I think that's what's super interesting for us. Be able to bringing those two worlds together. So I second you on that. It's I'm curious, in the current market, Charles, like what has been, you said for the last 18 months, your clients have been asking about vaults.
Yeah.
Already like pretty technical, deep problem, like deep technical, like product. And I'm curious, what do you see like the gap for really like helping those institutions to adopt like those technology and those type of investment?
Okay. Do you want me to go over like the type of question I have over the months too? Or
yeah.
So I'll start with that. So it was interesting. So we've known Morpho and many other protocol for a while. And we've been looking based on our own idea and what clients are asking us at different type of product. Interestingly enough, but at the end of 2024 and the beginning of 2025, we started to have fintech when we were discussing potential of the product, asking us, well, that's very interesting, your idea, maybe yes, but are you looking into Vault? Usually it was related to Morpho. And the answer was, well, yeah, we'll look into them, but we don't have a product for that. A vault can be rated, and that's something that we've seen in the past. You can rate a vault. Now, if there are crypto into it, it will have an impact. So there have been consideration on, well, should you have another type of risk assessment for vaults? And well, right now we don't have a product, but we're still looking at that. Then it was interesting because it was not just the fintech asking for that; it started to be the custodians. And the reason was both were interested by the new type of yield you could get. Then after mid-year last year, we started to have some asset manager asking about it. So it was different, and it was for a different angle, right? So in DeFi, in crypto tokenization, there was a topic that was brought up very often, which was the chicken and an egg problem. You don't have enough good product in crypto, in DeFi, whatever you call it, and that's because you don't have enough liquidity and AUM, and that's the other way around. Well, you don't have enough liquidity and money and AUM, and that's why you don't get enough product, right? So you needed one to start the other. But now with vaults, what we've seen is, well, the fintechs are interested in the yield, and they've been, well, adding a lot of liquidity into those vaults. We see the example, for instance, of Coinbase, which then triggers interest from asset manager that we're basically thinking, well, I can take that liquidity, I can put it in my tokenized product, I can maybe start building something around it. And then I think vaults are actually the key that started to unlock this. Now, just generally thinking, when you look at, well, you have the S&P 500 available now on Morpho, tokenized with centrifuge, and it could be on another protocol too. I want to just say Morpho all the time, I know.
But you can.
I know I can, but I'll look pretty biased. But that's the protocol we asked the most about. The thing is, okay, I can have an exposure to the price of the S&P 500, and I can get an extra yield on it. I mean, that's great. But something that nobody can really answer right now is, okay, what is risk, right? So it's a classic, for instance, yes, I can get extra yield on my crypto doing it directly, depositing into Coinbase, but like there's absolutely no visibility on what kind of risk I'm exposing myself to. So of course there's different solution. We might touch on that. And if you can have like not everything in one pool, and you can actually have, you know, limited exposure to some token you would not want to be exposed to, it's safer. But at the end of the day, there's not a framework right now that is very clear on what risk you're exposing yourself to. So that's definitely something we're interested in.
Yeah, I'm still here. That's actually, very interesting, because usually DeFi is overlooked a little bit by, traditional finance, saying, like it's not regulated. We don't know what's going on in here. And what I hear from you, Charles, is like you really make that choice at S&P, say, well, we have our client asking about Morpho and those, Vault and those products, and we need to come with a solution to assess this.
We're looking into it. I cannot tell you we have a product ready that will be outside in that many amount of weeks or months or year, but we know there's a reflection to have here. We're thinking about it. We want to be associated with Vault, hence the sponsorship there. Now, there are questions related to Vault that our clients also bring to us on, for instance, the legal angle. Who is responsible? Is that the Vault owner? Is that the infrastructure? Is that the creator? And where exactly are the different responsibilities? There's not really an answer to that. And some clients are more, they are interested, but they are more fearful there. Now, what we're always been interested in, and it reflects in our title, right? So my actual title that I chose was DeFi Transformation, Head of DeFi Transformation in 2022. My co-founder is Chief DeFi Officer. Now, why, right? Because everybody at the time would have a title that says digital asset, and it was at the time specifically a way to not say crypto and not say DeFi and only tokenization. So we look at everything, we're part of everything, but we always had this thesis that what is really interesting is the power of networks, the power of decentralization in just the feel like the new internet of values that is blockchain, and that eventually there would be institutional DeFi. Now we see that there is an emergence of something that we call institutional DeFi, where you have big names, I won't mention any specifically, that are now looking at the technology and seeing how they can apply it to the different issues they had, be the limitation on time, T plus something, or the extra value they could get from it. Of course, there's always the angle of, well, we could service the money that is on chain, but now it's more than that. So I believe, I'll speak, like I'll do a disclaimer I should have done before, like all opinion on my own, not from my employer. But I believe institutional DeFi is here to stay. Now, they are hack, and that was going back to your initial question, right? There are a lot of risks that are not well assessed and understood. And there has been several blow up. There will be more. I'm not like absolutely bearish, like some article we had recently saying that, well, everything's too dangerous because of AI too. But I do think that institutions that want to participate in the field will have to scale up their defenses, as you have model like Mythos. It's going to be working both ways, right? It's going to be a vector for attack, and it's going to be something you can use to protect yourself.
Okay. Just checking if there's some setup, I think, being glitchy. That's very interesting. Head of DeFi transformation, Merlin, you're positioning Morpho really like the that bridge between DeFi and institutional. You've been doing like a lot of push. I saw you, and we were on a panel at Cannes like a month and a half ago, and you my understanding is like you're really moving into that direction. Based on also like what just Charles says and your vision, like what's the overall strategy for actually becoming like and bringing like more institution on chain?
Well, maybe I can speak about the beginning and why there's Vault in the first place. So in 2021, most protocol were actually what we call landing pool, where all assets are like pulled together. And then that creates a very nice UX because people can like deposit, withdraw, everything is instant. The UX is very nice. And on top of that, you had like the DAO, so one centralized entity that would decide on which asset to list or unlist and the risk parameters, etc. It was working very, very well at that time because it was kind of easy and there was not so many assets. But we realized that as DeFi is scaling, you'll see thousands or even millions of different assets that are going to be posted as collateral, some very liquid, some very not liquid. And you can see that if you pull everything together, there's a problem where if one asset blows up, everyone is exposed to that. And the recent event with the Kelp and Layer Zero hack showed that one single asset could impact one of the biggest protocol out there, and could have like a very like huge side effect. And so we realized that 3 years ago, when building actually on landing pools, and we decided, hey, if we really want to scale the DeFi space and bring more institutions, fintechs, and new type of entities in that space, we need to isolate the risk. So that one asset blows up, it only affects the people that are actually exposed to that market. So this is why we created Morpho Blue, which was a landing protocol where all markets were isolated and people could select their exposure. But when you can select your exposure, that means that a random retail users would need to select, oh, I want to be exposed to that market, and it brings complexity to the UX. So instead of asking users to choose and reallocate liquidity depending on the yield and the market conditions, etc., we realized that, hey, in fact, we could externalize the risk management to another layer. So you'd have the market accounting layer on one side and the risk management on the other side. And the risk management layer is actually Vault, where any entity can create a Vault, which is a piece of smart contract, some sort of a bucket that where users go to that Vault, deposit their liquidity, and then this Vault is going to take care of where to route that liquidity, on which market to allocate, etc. And you have a risk curator, which is another separate entity of the DAO that would allocate and decide on which market, which configuration of the market, etc. And so by separating those two different things, you could create you could scale to infinite number of markets and vault types and product types. And you could create like high yield vault with high risk, and low yield vault with low risk. And the same single entity can operate multiple vaults and provide multiple different products. And that's a little bit the origin of why Vault now is a big thing, is because people realize that, oh, now we can create many different products that are targets different type of persona, right? And so some fintech, usually they don't want to expose to many of assets. They want just to be exposed to a very tiny set of blue chip assets like ETH and Bitcoin, because they know about it. And so they could create those products that are really tailored and maybe only accessible to their users. And that was not possible 2 or 3 years ago. And with Morpho, we enable that. And this is where the Vault type of product kind of blow up over the past 2 years, is because institutions and fintech can create their own product and own everything top to bottom, while being very picky on what risk they want to expose their customers to.
Okay, so really to dissociate the risk from the management of the asset and answering like a need from the market. So what I hear also is that we use mostly Vault for like pure crypto assets. Now, if we start looking at the RWA, which are, I'm going to say, like really issued high quality assets, private credit, some traditional financial asset issued on chain. What is the current state of the market and approach, for those type of more, traditional market that we could put into vaults and that could really increase, like the volume on chain? I guess that can be for Charles or for Merlin.
Okay. I can take it. So far, I think there's 30 billions plus of reward asset that have been tokenized, perhaps even more. So it's quite huge. But if we check how much has been used on DeFi protocols and mostly lending protocols, it's actually a tiny fraction of that. And it varies depending on the type of asset that has been tokenized. I think on Morpho, we have like 1 billion of total deposit against reward asset, which is maybe I think the biggest lending protocol in terms of reward assets, but still is a small fraction of that. It's mostly T-bills, credit fund that has been tokenized. And the more complicated those assets are being tokenized, the more difficult it is to list at the moment on the lending protocol. Why? Because it's not about just tokenizing the asset and then it sits on chain. It's how do you list on the protocol? How do you price that asset? Which oracle? How do you liquidate? Because liquidating, you need like whitelisted liquidators. You need perhaps the liquidity. Could be on dexes or like asset manager that has that on their balance sheet, enough capital on their balance sheet to perform the liquidation. There's also the UX to take a position, to leverage, deleverage on those positions, and all those kind of things participate in making or providing the user experience. And those building blocks, there's several entities that are working on this, but we're still not at the moment where the UX is super smooth to onboard all reward assets on chain and to list them easily on lending protocols, etc. So I think there's a bit of work still to be done. There's companies like eea-eth that are working on the leverage side of things. For instance, there's Grove who are working on providing like liquidity facility for liquidations. So there's many actors working on that aspect, but still a lot of work to be done. But the trend is up and to the right for sure.
Yeah, so RWA is the end game, right? So everything that is being built and the rise of institutional DeFi is not just for a few crypto. I mean, they are, interested and think is interested with Bitcoin, etc. But when you already have tokenized money market fund, you will have, tokenized equity. You'll have basically every tokenized financial asset. Just if LifeInc is saying it, then we'll believe it. But the question before was, okay, what for exactly, right? So you could say, well, maybe you could vote in ETFs. There's a lot of different things. But now there's different new thing with Vault. So with the Morpho type Vault and the lending Vault, well, now you can get an extra yield on whatever you tokenize because you'll put it in those Vault, in those market, and well, it's going to be a collateral. You get a yield from people taking a loan. Of course, back to the question, okay, what is the risk? Like, it's something we really want to focus on. Then there is another type of vault that people are also interested in, and they are maybe simpler, but it's just the packaging of, like just fonts that are not necessarily credit related. If you think of a world where you have royalties, being tokenized, and you have, the bonds of whatever country being tokenized, and you have whatever you can think of, right? Preferred shares. Well, any yield you can think of. Now they're all tokenized. You can start to create those packages, those vaults that are made customized to you, right? And that's something the asset manager are also interested in, and eventually the IRA will be interested in. It's the mass customization of portfolio creation, which is something that is not that easy to do today. I mean, there's always way, but if you want to very easily create a solution based on your taste that has, I don't know, the tokenized royalty of Taylor Swift mixed with some private credit mixed with the bond from whichever country you're interested in, etc., in one portfolio, it's not something easy to do. With Vault, you'll be able to do that as tokenization scales. And the real world asset and the tokenized asset, and then tokenized asset are just a hybrid world for a while. Then you have digitally issued asset. That's the real game, right? It's all you will be able to build that do not necessarily exist today, or it's really hard to do today. And then the classic, right? It's like once you have the ICO, then you had Uniswap. There will be some of the things that will come that we're not even thinking of today.
Well, very forward thinking, like the royalty of Taylor Swift private song.
So some royalty have been tokenized already, right? And there is I think maybe the IP token looking at royalty and that kind of things. So it's a focus, right? And it's true even for like the mortgage servicing, trade finance, all those use cases we've looked at. Some were rated privately. It's real, right? It's been happening for 3 years. Like everybody is looking at tokenizing everything, including energy in the Middle East. So technically, a lot of different flow of cash flow, and just in general, is being tokenized, and then will become available to an audience that would not necessarily have a very access to it. And I'm speaking still of institution, right? If you're in private credit, you're not in maybe another field. So it will have a huge impact, and Vault are just an easy way to customize it. And that's what, again, some institution mention as the next generation of wrapper. You had the ETF that disrupted the mutual fund. Vaults are probably going to disrupt the ETF in some shape or form. You have all the lending angle that let you get a yield on something that you would not typically get a yield on and not easily get a yield on. But then you got also just this kind of packaging way to get a new type of portfolio, which also have risk that should be looked at too.
Yeah, because I'm curious, like the risk, like we know all of this is possible for a while, but there's still like when you talk to some of your clients, Charles, like what like the main question, that you have to re-explain all the time, in terms of like risk management and problem that they raise, say, oh, we're afraid about this or that. What would be like, what are those questions that you have to always repeat, I would say?
So another disclaimer, I'm not on the analytical team of S&P Global Ratings. So if there are some specific question related to our methodology and how we would rate something, then it would go to that group, which is firewall and protected, and I cannot influence. Now, one of the biggest questions, I'm changing a bit your question, but something that comes very often is many products that are being tokenized, especially from the DeFi company, but not only, don't even know that they can be rated. And sometimes there is more an education to be done on why it is relevant to be rated, what it demonstrates, why you should be interested in this. Because, well, they just assume often that, well, it's not a bond, so it cannot be assessed. Specifically for us, what we'll do is look at the existing methodology we have, and if with the tool at hand, the analysts feel that they can assess the risks that are there. And the question will usually come from us on really understanding how different products are set up so that we can confirm we can address the risk, and then we'll go forward with for instance, a rating. But I don't want to be seen also only as a rating guy, right? For instance, on the Dow Jones Indices side, like there is also an interest around Vault. There's a lot of interest around the next generation of IP on chain, when you tokenize a fund, you're really adding fees on fees. So it's not, it's not the final solution, say in a good way. The final goal is something digitally on chain, and there's many different way of building that, right? If you look at the S&P 500, what is the next generation of product with the S&P 500? There's a lot of conversation that you could have on how does the IP on chain look like, with NFT like kind of wrapper, or other vault like solutions, or the type of lending that could be done with, I think, Morpho Midnight. You can have multi-token, so you can think of new type of product there that would receive, I don't know, maybe the specific share of one index, and then you would have a specific yield on that group. I mean, there's a lot of things that are being looked at. The client that will ask really about the vault are definitely the most advanced in the field. Now, when you discuss it with those that are, well, a few steps behind, usually they get the interest fairly fast. Now, in some locations, that's really for Europe and the US, though. In Asia, for instance, last year in part of Asia, where when the interest was really on stablecoin as a reaction of the Genius bill, there's a lot of focus on stablecoin just because of what it could mean for this country and the domination of the US dollar. So I'm curious about your opinion on that, Merlin, but I haven't seen that much understanding and education on Vault in Asia for now.
It's going to change. I actually. Okay. I can jump on that, but in Asia, I think it's more that the ecosystem is part in two sectors. One that is mostly composed of wells that are using directly DeFi protocols, and the other side is more heavy regulated, risk averse type of entities. And they are more like followers of what's happening in the US. So the whales have been using DeFi protocols for a while, and they're used to that. So, and I've been very, very active in the ecosystem. The second side is now, I think, catching up on what's happening in the US with the different act that have passed recently, Genius and Clarity. Things are moving much faster in the US, and now all Asian entities. We've met a bunch, Paul and our BDs were there a few weeks ago to do a tour there, and there is a lot of interest to actually go on chain, and they just want to know how Coinbase has done their earn and borrow product on top of Morpho. They're really, really eager to do the same and replicate what has happened, but they need a lot more education and onboarding into that space to make that possible. So I think there will just be a lag of maybe 6 months to a year to see things moving forward. But I would say that now they're really hooked by the sector. Now, I just wanted to come back to something that you say, that tokenizing some funds is adding fees on top of fees. I think credit fund tokenization in general is a transition phase. More, my intuition that in 5 years, actually, you'll have origination of loans directly on chain, and the vault that is lending and making those loans possible is going to be actually the fund, and you'll have trenching on top of that, etc. You'll have many other mechanisms to recreate what institutions are familiar with, but the origination will happen on chain. It's just at the moment, not everyone has a wallet at those institutions. There's still a lot of things and building blocks to fit together to make that the UX and that possible on chain. and before we reach that state, we'll have those funds being tokenized on chain. It's not ideal. It's not the solution, but a efficient phase, so we can move forward and also learn along the way and build build the necessary product to make that easy.
So what I hear is that the acceleration won't come from regulation or from technical. It's more we need just to build like those products and to test it out.
Oh no!
Those are like the main factors right
no,
now.
actually, regulation. What happened in the US, like bring a lot of clarity into what's possible, what's not, and institutions that were not read. I mean, all institutions were looking at on-chain blockchain things a few years ago, and if you ask all of them, they were, I don't know, working on Corda or Hyperledger, Bezu, or like other type of private blockchain experiments. They were all doing this. Just the question was, can we actually do those kind of things on a public blockchain, interacting with public protocol, permissionless and immutable protocols? And I think that the recent regulation is kind of bringing clarity on what's possible and what's not. There's still things to clarify, but it's enabling them to move forward and to put more resources on that. And also institutions are increasingly understanding that it's not because there's a permissionless protocol that you can't have compliance. For instance, on Morpho, especially Midnight, you'll be able to have fully compliant product while the underlying protocol is immutable and permissionless, just because you can configure a market in such a way that only specific and it's possible. You can make products that are safe for their customers, but also more efficient because you can tap into a broader source of LPs. You remove a lot of operational load, so you can reduce fees, etc., etc.
If I can, I'll touch on that. So regulation is very important. It cannot come too early because then you block innovation. But sometimes, let's take the example of stablecoin. Right, there were no regulation on stablecoin until the Genius bill, and I mean in the US, there's been MiCA in Europe. There've been other regulation. At the end of the day, well, the companies that launched stable coins, like including USDC, did it before it was regulated, and that was, again, like a US led innovation, and now everything is US based for the stable coin. Like, we'll see if the Euro stable coin can, really take a chunk of the overall AUM of stable coin, but so far it's not the case. So regulation is coming always. First, a vault are being created. Some player will be a bit more daring and will not wait for a regulation. And then as well, different issue occurs and different, the size of the overall total value lock increase, then there'll be more push for regulations. There are right now different consultation in Europe, like to look at the next version of MiCA and others. But I think the don't find the word, but the comparison with what happened with, for instance, stablecoin is interesting in the sense that, well, we don't always need it to be there before. But there's a lot of definition that are needed and do not exist. And I'm a bit off topic, but for instance, what is a smart contract audit? Like, there's not a real definition. Who can do one? What should be in it, right? So there's a lot of things that would benefit retail and just security if they were better defined.
Well, I can share some stuff that we did a couple of years ago. We had actually a spec for that smart contract audit, but I guess it's something that still needs to be more widely adopted.
Well, everybody is doing one, right? Even a scam on, I won't say blockchain, but in some blockchain, will say, yeah, we're audited, but there's no real definition of what it is. This is a Twitter guy that reviewed the code and do a code documentation sometime. So there's a need for some standards and clear definition of what is needed. I will come eventually.
No, actually, I will share you because we built a standard with different EEA members, like until last year, I think, with smart contract audits, in common language. I share that. I don't know if I can share that in the chat right now, but I agree with you. The standards, either like the gold standards. Well, we have it, but there is agreement of like common language across the industry. We use sometimes like maybe some terms that are purely crypto, but actually have an equivalent in TradFi, or just like some few nuances that could be helpful. So what I hear from you is that everything is gonna, like, the clarity from Genius Act and Clarity Act are bringing like a lot of what we can do. Now it's about the people like building, but also like this conversation, like the one that we're gonna have at the Vault Summit. When we bring actually institution and Web3 together to have exchange and understand better like where we can meet. I feel like this is what's gonna also like support like the adoption.
Yeah, I mean, one of the things I'll stop, but one of the things I think will be very interesting at the Vault Summit. It was always the case in Cannes, but I mean, New York is the place to have it done even more. Is this connection between the protocols and the exploration being done and from people from financial institution. Again, I'm very interested in this institutional DeFi, and I think it's going to be a very interesting place because here, the previous Vault Summit were in Cannes and Buenos Aires. Both are very interesting location, but not that easy to reach in the middle of the year when you're working at an institution. Here we will do it in a very big financial center. We think there will be a lot more interest from financial institution because of the venue, because of the participant, and because of the location. And that's always this interaction that is very interesting. For those that are newer in the field, coming in, learning more about what different institutions have been saying and doing. Sometimes Fidelity, Apollo, etc. will have things to say on too. But the networking that come around after is always very valuable for the entrant there.
Yeah, I can attest that. I think the DeFi space has been really centered around itself for a very long time, for many reasons. Just because it was a complicated world. There were a lot of things to actually build, so that ecosystem can be more open toward the outside world, and also institutions were not really to move fast, at least in.
Is this me or is this Mel?
Yeah, no, we got some delay
in
You're cutting, Merlin.
Oh, sorry. Yeah, do you hear me?
You're back. Yeah, you're back.
Yeah. Okay. Sorry. So now, what DeFi protocols in general are realizing is that a lot of solutions is actually you need to build trust, and to build trust, you need to create those relationships with the institutions. You need to onboard them. You need to educate them. We're talking to a lot of institutions that are and we're spending a lot of time about just explaining how it works, what are the risks, whether it can be like credit or smart contract risk, what they can build. A lot of them are actually like really curious to know what should be their on-chain strategy and how to make it work. And I think the protocol in general have a lot to win by being that not just infrastructure provider, but also that business partner, business advisor so that it's their journey to DeFi is actually made easier, and they also make more informed decisions because it's still a space where there's liquid money at stake, and they have also their reputation at stake, and that those two things is not something that they're going to compromise. So protocols need really to make sure that they are well onboarded and to provide that care that will make things easier and faster.
Okay. Well, I think we're at time. I guess few words. If you're here, like, come and see us on June 5th on IC. I think tickets are almost sold out. So it's going to be a maximum, I think, like 300 to 400 people crowd whole day. I'm very excited about that. And there is actually, I think a panel in the morning with BNY and DTCC. And there is also like some other institution that's going to be here, some other like DeFi player. I think it's going to be a very great event. So I'll get to see you again after seeing you in Miami, Frankfurt, or somewhere else in the world. And we'll be all in New York for this one.
Yeah, we'll see you there.
Super excited.
Well,
great.
Thank you very much for
see you guys. Bye bye.
À bientôt. On se voit la semaine prochaine.
À bientôt.
À bientôt.